Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only, and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's firm footing extends into Tuesday and also Wednesday now, after inking in an intraday high of 73.40 on Tuesday and now today at 73.34. Meanwhile, the US dollar, which measures the greenback strength against a basket of six major currencies, remains relatively firm after rebounding off the intraday low of 92.37, or also the 92.40 support, and currently trading around 92.70. With the pattern still likely to find at least a struggle towards the top side, unless we get a close above the New York of 73.3040, then I do anticipate a pullback to 72.85, although the bears are likely to be waiting around this area of 73.3040 above and up towards 73.75 and ambush to send the market lower. If the view is that the dollar index can continue its rebounds from that support level of 92.40, then I expect to see a rise up to 93, up to then further. And that would mean further weakness returning back to the Australian dollar. Well, after testing the top side here, the market found a bit of supply at the 118.35 level. From the challenge on Tuesday, we can see that we've posted a shooting star that awaits confirmation. I would say that if we are looking for a break of this downside, then around 117.60, let me just bring that in a little bit there, around 117.60, then that would give further confirmation to the target, which I view around that 116.75 to 116.10.25. As I mentioned, the dollar index has actually rebounded, and hence why we've got this rejection, because the euro is weighted at 57.6 to the index of the US dollar index. Interestingly, that the hammer coming through on Tuesday has strengthened the bias today as the market reclaims that 110.20 resistance level. It is a little bit to the RSI that's supporting this move, and also the MACD strengthening and marrying up to that. If so, this continuation of strength to the dollar as yen weakness emerges is that we are looking towards 110.70.80. But I do feel there'll be an ambush around this area and eventually see the market reverse and look back towards the support of 109.70. Interesting pattern here from the rejection of 138 figure 20 for the sterling, and now from the rejection puts a slight buckle in the RSI. If this pattern does continue, then I do anticipate the market to slide further to 137.30 or down to 136.70 and reassess from there. The cap holds at 151.70, but under pressure. If we see a break here, then it's most likely to see a slight rise in the dollar yen or the weaker yen leg that would see a push, but likely to find to be a tough ride or bumpy ride towards 152.30. I do anticipate a sharp rejection soon, but at the moment the market still appears very much to a bullish bias as it pressures this top side. Well, as the eyes look towards the non-farm payrolls job number this Friday, the market is a little bit trading sideways for gold. Nevertheless, we're still maintaining a positive signal and therefore could still see a rise up to 1,818 to 1,824, and with the cap seen at 1,830 to 35. I do anticipate a rejection like previously seen and therefore look back towards the support. We do need to break beneath 1,795 to reinstate the downside to 1,770. Look into the oil. Well, the market now waits for the OPEC meeting, which starts later today. After this bearish dragonfly doji, the market's a little bit indecisive. It doesn't mean to say that the bears have the strength to push the market lower. It's more about the fact it's a little bit of a direction of who can win the actual movement. With the positive signals in place, we still should not discount a challenge to the upside. However, the resistance level around $70 to $70.20 could pull a bit of a tough challenge and see the market turn lower back towards that 66.5. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.